Well, next, last but not least, is our Venture Capital Dealmaker panel. And we're just going to move a few extra chairs onto the stage because it's going to be a 6-member panel. And so just give us 1 minute. Yes. Okay, next time. All right. I promised to get everyone out of here by 6:30. So I'd like to welcome to the stage Gary Rieschel, who's standing right next to me, Chiming Ventures. Perry Chu, Hope Chen of DFJ China. And Richard Liu from Morningside Ventures. Jenny Lee from GGV Capital. Patrick Loofbourrow from Cooley. And Ron Cao from Lightspeed China. Great. Somehow, Richard, you were hiding. I didn't see you.
Yeah,
Okay, and I didn't see Jenny either. Okay, that's right, our annual gathering. Yeah, I remember last year's panel. We had the co-founder of YY on stage, right? And then they went public two months later. So I'm just wondering which one of those companies we had on stage here today may be next. But I guess that actually kind of is a segue into the panel. We've got a really all-star group of VC panelists here, and one of the interesting things about covering the venture capital business is it's never dull. It goes from feast to famine, roller coaster to roller coaster. And I guess I'd like to ask the panelists where they think we are now on this pendulum. I've actually noticed a little bit of a pickup. Maybe it's just because we're into the fall now, but I've actually noticed a little bit of pickup in deal financing after what seems to me like a pretty long dry spell of about 1.5 years. But what do you think? Let's go down the panelists and get your view on where we are now and what the outlook is. Ron's going to start first.
Okay. Well, I'd love to hear everybody's comments because a lot of times when you're in sort of a deal heat, you're head down and doing deals, and I feel a lot of heat actually. There's a lot of activity at the early stage level. I think last couple of quarters you read all these reports, things are slowing down. I think that's it's a lagging indicator. I think the front line. I'd love to hear the insights, but I think it's quite active. I think people are in general pretty optimistic about the exit market going forward. You got some big IPOs coming up. I think people are in general are feeling good about them, and the folks who were able to raise meaningful amount of money in the last couple of years are this panel right here are very active.
Mm-hmm. Okay.
Yeah, I would agree. I'd also say, I think we're all in the last couple of weeks been ridiculously busy because everybody came back from the summer with a vengeance, and all those deals that had been on sort of slow pace for the last couple of months, they're all sort of, geez, it's almost September 30th, we got to get this wrapped up, and so it feels like ridiculously busy in the last couple of weeks. But I'd say consistent with you, we're seeing a lot of early stage activity, really, really good deals in the early stage, and some of the players that you don't typically, some of the VCs that you don't typically see dabbling so much early stage, really having good visibility into some really great companies and moving early to take advantage of those companies. So we're seeing a lot of that, and a lot of activity by strategics as well coming into deals, sometimes more than one in the same deal, and that's a good indicator, and obviously a great first step in terms of potential trade sales down the road. And then I think the public capital markets, and particularly in the U.S., have been really strong. I mean, we do a lot of Cooley does a lot of U.S. capital markets. I think this year we're on track to beat 2,000 internally for our own personal statistics, and so it's when you think about the ridiculous level of activity in 2000, that's a pretty strong statement. A lot of that's in the life sciences sector, but it's a pretty strong statement. So.
Yeah, Jenny.
Yeah, so I will look at it at different perspective. From a VC's fundraising perspective, I think this year it's been low. Probably on the scale of 1 to 10, it's 1 or 2. We do expect, given the stage and pace of all the funds in China, I think next year this would probably heat up in terms of new fund or new fundraising for the VCs. Probably maybe a 6 to 7. From a VC deploying capital perspective, I think across the spectrum, early, mid to late, I would say the pace is not overly fast. I would put it at rational, so probably a 4 to 5, in this 1 to 10 pendulum. From an exit perspective, I think exit continues to be very tough. But if you put just IPO exit, very tough. I would say 1 to 2, right? There's no exit from China because the domestic market has been closed, still closed. International market, there's only been 2 Chinese IPOs in the US last year. So this year we may see 3 or 4 if we are lucky, and there's only 4 months left. But I think the M&A activity is picking up substantially, and that we've been seeing in the last month. So from the exit perspective, we are hopeful that we can do more and get more money back.
Okay.
Well, I think maybe from the very macroeconomic perspective, I think China is in the very important, critical the year, and everybody is waiting for November. The top government will host their the first important meeting, and they will release a lot of the reform policy. So I think a lot of the fund manager or investor are waiting for that, and they will decide what will be their next step to move forward. That's from the macro level, and in terms of the industry, I'm in the venture in the TMT sector, but basically I met several the PE fund managers. They all told me the traditional manufacturing industry is very tough. The overcapacity is still, the serious. But TMT sector, basically over the past, 2 quarters, quite, we see the very attractive, price up in the stock market. But IPO, Jenny just mentioned, I agree with her points that people still wait for, the successful company like Alibaba, and also other, the candidate like Qunar or maybe other, mobile company as well. But basically, we didn't see very, very active, the IPO window recently. Maybe by the end of this year or the next quarter, we'll see more activity. In terms of, obviously in this year is the big season for the M&A in the TMT sector. My portfolio and other fund portfolio, we can see, the several top TMT company like Baidu, Alibaba, and Tencent. The 3 top, the TMT company are very active to pursue those acquisition deal, and also strategic investment activity as well. It is obviously some mobile company valuation is driven by the competition from these 3 top players, but it's not sustainable. My personal view is not sustainable. They will not always, compete at like today. Maybe next year they will slow down their acquisition appetite. So this is some good news and bad news, but basically our fund, we will continue to perform as regular as the early stage TMT fund. Every year we will invest 6 to 8 deals. And we didn't, got too much, the influence from the stock market from the macro level. We still seek those investment opportunity by choosing the top entrepreneur, great opportunity, like this. Yeah.
Hope?
Yes, right. I think everybody has seen the numbers from zero to IPO. First quarter fundraised 600 million and fund invested 900 million. So it's the first time in VC industry in China in the last 15 years that you see a reversal of those numbers. So clearly, in terms of investment activities for our early stage fund, maintaining pace fairly conservative 3 to 4 deals a year, and we're still seeing a lot of good deals. But however, we do expect the large amount of money chasing after deals, that period of time is probably going to be over, and people are going to pay a lot more attention, at least from our portfolio side, on profitability, path to profitability, and how to run a solid business and build our management team and process and move forward in a much more rational way, rather than just go out there, spend the money, and take market share. That's sort of a 恶性竞争. So that's what we are seeing.
I think for Qiming, if you look at kind of different components of it, if you look at it from the venture perspective, most of our LPs have said that they will deploy the same amount of money in China over the next 5 years, but they're going to deploy it with a lot less groups. So that means there are going to be fewer venture funds being able to raise dollars. The RMB fund market has collapsed completely because there's no exit. So the RMB funds have trapped billions of RMB, and who knows what the current CSRC rules are going to be in terms of loosening the queue for domestic IPOs. So I think if you're a venture fund, the firms on this panel I think are relatively lucky, but there's a lot of firms that are really going to struggle to raise money, I think, in the future. Over time, that will start to constrain money that's going to entrepreneurs. The hangover of the funds that have been raised the last few years has been that we're still now in the fundraising environment where you have a lot of heat and you have a lot of competition based on price. So just a short aside, so we issued term sheets on 2 mobile gaming companies. Actually, we did 4. We lost 2. One was to a strategic that paid 2.5 times as much, and the other was they released the game and the price went from 12 to 15 million pre to 65 to 70 million pre, and you just have to wonder what someone's thinking about. And so, I think from that perspective, that ultimately will start to settle down. A lot of the waves that we've been investing off of the last few years, I think, are ending. The mobile wave, that's not a big surprise anymore. A lot of the the hardware products, people have placed a number of those bets. For an entrepreneur in healthcare, I think it's the best time in history to be an entrepreneur in healthcare in China. It might be coming on the worst time to be an entrepreneur in healthcare in the United States, because again, most of our investors have said they won't invest in healthcare specific funds. But if we had to pick one sector in China that was going to materially improve over the next 10 years as an investable area, it would be healthcare. We currently have 28 companies in the healthcare sector. The only problem in healthcare is for the domestic companies, there is no predictable exit. Going back to that, you've had the government close the stock market for 54 weeks. And that is something that makes investing in companies that you're going to be holding for 5, 6, 7 years it's a different calculation on your risk risk premium that you need for the deal. Finally, in clean tech, if you're looking at that sector, in the first half of the year in the United States, $3 million total went into new clean tech investments. That's a sector that was pulling 1.5 to 2 billion a year several years ago. So the entire investment community in the U.S. has died. So the opportunity here is to figure out, if you have a platform, what is interesting in the U.S., and people are going to be very fascinated to have that technology come to China. And so I think, again, if you're an entrepreneur here and you have a platform, then I think there's going to be a lot of very, very interesting deals that you can structure with U.S. firms to bring those technologies into China.
As I was listening to the panelists, there seemed to be some disagreement over where the IPO market is. Some people said it was very strong and others didn't seem to think so. So where is it?
Well, so China's simple. There is no IPO market. I
Right.
mean, the last company that went public in China was August something last year. So, and there is no forecast for when it's going to open. There's
Yeah.
wonderful speculation. You'd be better
Yeah.
off playing hope in poker than you would be betting on when that market's going to up again. So I think that's just a real problem.
Yeah.
So if you're investing in RMB today, and you're investing with the idea that it's a late stage or pre-IPO deal, I don't know how you can make that assessment, because there really isn't a forecast for the exit.
Yeah. So if you're an entrepreneur, should you just say no to an RMB fund?
So I personally feel that the RMB fund in the past 2 or 3 years is very hot, but they all chase up the pre-IPO investment opportunities. But today, I think Gary mentioned is the A-share market they just closed the whole window. No one can go IPO right now. Until today, the government didn't release that window. Well, so it's really
I keep
depends.
hearing that window's going to open and open, but then it hasn't, right?
So everybody is waiting for the November the conference.
Yeah.
So that conference is so important. It will give you a lot of the policy.
Yeah.
So I guess they will also release that as well.
How has it impacted your business as a venture capitalist? How has it changed the way you're doing things?
Yeah, so I think that when you look at exits, obviously IPO is one way to exit.
Yeah.
M&A is another way to exit. From a domestic market perspective, so GGV, we have both an RMB fund and a US dollar fund. I think that in the past, there's been less secondary sale, meaning VC is selling out in subsequent rounds. But we do see that as an increasing trend as well, right? So I would say that in addition to the IPO exits, the M&A exits, when's the right time to let go of a little bit of your ownership in subsequent financing round becomes key. So I think all that comes down to, in the market, to be fair, I think the China venture market is a lot smaller than the US market. In the US, it's a lot more developed, 50, 60 years. There are more companies, more deal flow, very, varied sectors. In China, whether it's VCs or the number of deals or quality deals out there, it's probably, about 1/8 to 1/10 the size of the US market. So at the end of the day, our thesis is that it has to be a good deal, high quality deals. And if this is a market leader, high quality deal, whether it's IPO, that one or two that gets to go out when the market in the US, that would acknowledge market leaders, I think they would still be able to get IPO. In the case of M&As, as Richard mentioned as well, I think when the giants, Tencent, Baidu, or Alibaba comes down and said, I'm going to pay the 2 billion, valuation for any company, it has got to be the market leader in the category. So if you have a market leader, if you are a market leader, I think your options are a lot better. And obviously, when the Xiaomi hits the 10 billion valuation, it's also a good time to think about whether you should be selling. So I would say that it's down to that last dot in terms of, how do you continue as VCs, how do you continue to generate returns and distribution to your LP, even though the market looks like it's, still underwater.
Yeah.
So I just want to. So this is kind of like the Lei Jun fan club up here. So
I realize
so we
that.
we should all be very honest about that. But I think one of the things that if you think about what is hell for a limited partner, so one of the investors in Qiming or one of these funds, hell is you get a distribution one day, and we proudly announce that we've sold a company, and they get their check, and the next day they get the notice that one of their other investors has bought those shares. So they're basically trading a piece that we had for a piece that another firm now has, that they're still paying, that now they have to start paying management fee on from the beginning, that they're going to hold for the next period of time. 55% of all the private equity exits, non-venture capital IPO exits, so private equity, 55% of those exits in 2012 came from one private equity firm buying from another private equity firm. That is a disaster for our industry, because that is simply swapping one person's carry and one person's management fee for another. That is really not something, when our investors look at that, they want to just run screaming, from the entire sector. And so I think that's one of the issues, Jenny brings up a great point. How do we work with the entrepreneurs to engineer more M&A transactions? And the entrepreneurs have to become a little more realistic. Not everyone's going to be worth $1 billion. In fact, most companies aren't going to be worth $50 million. So where, that I think is where the pressure will come between the VCs and the entrepreneurs in this next cycle.
Yeah, Patrick?
I think I agree with everything that everybody just said. Ultimately, entrepreneurs need to be realistic, because it's not always great to get a high valuation, right? A lot of these problems that people are referring to are as a result of, in some cases, people taking money too high and then putting a lot of pressure on the subsequent rounds, putting a lot of pressure on the VCs as well, and resulting in some cases, people having to do secondary sales or other transactions that, while they are better than not having transactions, they're not the kind of exits that people are looking for. And we're seeing, I think, as Gary mentioned, we're seeing, and probably because we do a lot of licensing related work, we're seeing a lot of people bringing in technologies from abroad and building companies around them as a way, in part, of sort of not having to get into these bidding wars on valuation and look for good technologies in markets that they believe in, assemble a great team here that knows the market well, a good local team that knows the market very well, and then build a company around it. And those companies, I think, we'll see more and more of, and they're very interesting, and particularly in the clean tech and life sciences sectors. So.
Okay. Yeah, and Ron, you mentioned you thought the IPO market is pretty hot, right? You said that you see a couple coming up.
Yeah. So my perspective is from a early stage tech USD investor.
Okay.
So we're looking at stuff that's going to be exiting hopefully 5 to 8 year time frame. And I think our peers are very active in kind of making the bets of the future. And I think certainly you got a couple big IPOs coming up that people are talking about. So those
Alibaba?
so not necessarily the number of IPO, but I think that just the significance of these IPOs could change things for some of the smaller and moderate IPOs. And one thing I'll add is that I think it's a very clear difference today versus a few years ago, which is the M&A market. I think it was talked about, which is that before the big boys would say, well, this is a company with a nice product, I can copy it and just kill them. And now it's completely the other way around in some cases where I can't afford not to buy it. I will pay a premium. With folks like Ali and others going public, that dynamic will only benefit the companies and the early stage investors.
Okay. So who do you see as the winners and the losers in the entrepreneur space today? Things have changed so rapidly over the past 10 years, from the copycats to the innovators, and from the returnee entrepreneurs to the local entrepreneurs. Who do you see going forward as the winners and the losers? Okay, Hope? We'll start with the winners.
I don't have the crystal ball here, but it is interesting that several of us here that have mentioned about the M&A market being very active. It is important whether we manage both RMB fund as well as the dollar fund. It is important to see that M&A activities to become much more of a viable exit, and entrepreneurs are much more accepting of the idea to sell their companies and work with, join forces and build meaningful business. In terms of, so that is part of the discussions that we have with a lot of our portfolios and helping to facilitate that process, both in terms domestically in China as well as leveraging our global platform and bring companies to China, or maybe Chinese companies to Silicon Valley and Europe. One simple example, for instance, we have invested in a big data company called Flurry. Many of you probably know that company, and it actually does data analytics on mobile platforms and has an install base on handsets, more than 1 billion handsets, larger than Facebook, if you will. And it processes about 350,000 app sessions of 3 terabyte data every single day. And the biggest growth sector user is actually in China. And we actually don't have a China presence here, except we don't focus on marketing and pushing the applications and all that. But we do have a very active China user, probably the highest growth of globally. So this company has started to discuss deep level analytics partnership in data mining partnership with some of the very large internet companies in China, which I shouldn't discuss the name, but it's that kind of acquisition that I would think that it will happen at some point down the road, like Lenovo buying IBM. That kind of acquisition would really change the Chinese companies like Tencent, like Baidu, going global and build a global brand, and which is going to be very exciting to see.
Jenny?
So if we define winners and losers by the value that they have created, then I think there are some obvious winners in China today. The ones that are north of 50 billion in market cap, essentially there are three on the internet side, as we know, Baidu, Alibaba, and Tencent. Now, if we move the bar down and we said, where is the next category of potential winners? Then I think Qihoo obviously has done pretty well. It's now at 10 billion. The question is then, is there room for, say, a Youku, right, who's closer to the 5 to 10 billion spot? And, who's the next guy that can come on? Is this the Jingdong, who's not public yet, but who may be preparing for it, given that Alibaba is kind of on that front? So I would say that in certain space, there are some clearer market leader, right? Whether it's you're at the 5 billion mark or at the 10 billion mark. In certain areas, I think that in the mobile area, there is still a lot more room for new market leaders to be formed. Given that this is an emerging trend, it's been 2 to 3 years. I think it's going to take another maybe 5 years for us to start seeing more than 1 or 2 companies that can hit the 10 billion mark. So we are hopeful on that front. I think in terms of losers, I think that there's always chance for a loser to become a winner. We are all perpetual optimists. Otherwise, we will not be sitting here. But obviously, there are certain trends. I think for companies, they have to figure out where is the value proposition that they can bring. So if you said e-commerce, right? Today, the e-commerce space is highly concentrated, right? Other than the Alibaba model, which is asset inventory light, the Jingdong model, which is more, like a supermarket of products, then the question is, can the vertical players win? Is there a chance for brand vertical players, right? If you're selling a physical product that's a single brand, is there a chance for them, versus competing with a Jingdong or a Taobao over time? And then the other question is, e-commerce, other than physical product, can it be lifestyle services? So lifestyle services could be, at the MPing when you want to order restaurant, reservation, if you want to have local services. So is there opportunities for the lifestyle vertical? I think in my view, the physical e-commerce, it's tough, given that the giants out there are very, very strong. In terms of lifestyle consumption services, I think that there is still opportunities because that also converges into the mobile online to offline platform, and you can actually go by vertical in terms of services. So there may be more opportunities for deeper value add, and so we may find the next category of leaders there. So still not quite clear, but hopeful that over time there may be more companies coming out from that space. So we will have to go down by vertical in terms of the analysis.
Okay. Richard, do you agree?
Yeah, I think I always have a lot of co-investments with Jenny, so we have a lot of these share something in common. But basically, I agree with the general observation that first those top big boy like Tencent, Alibaba, Baidu, they still benefit from the economic scale. In this the networking effect industry like TMT sector, the more user base you have, the more traffic you have, the more powerful you have in the whole competition. And also they have the high market cap, and they begin to use the new the weapon like acquisition to enhance their position. So they're obviously the big winner over the past the 5 years, and moving forward they will continue to benefit from that. But obviously we see some loser like the e-commerce overall over the past 2 or 3 years. The whole sector disappointed people because I think because they didn't really most of them didn't establish the real value. They just used the simple model like burning the money marketing dollar to create some the limited ROI to sell some product without too much differentiation, and that goes to pricing war. This is not sustainable. So the e-commerce is very tough, and also like Groupon, also the losing sector as well. The similar the effect, like they don't have too much differentiation. But always sometimes you just feel they're hopeless, but some player they will pop up as the superstar. In the mobile space, I think still it is the early time. The big boy still is the biggest benefit, and also Qihoo also get some the benefit as well. We invest two companies. One is UCWeb, the other is Xiaomi. Definitely with also Gary as well. So we benefit from these new emerging players. And these two companies, interesting thing is that they both have the international ambition. That's probably the future. In the future, we believe some of the local player, when they can really achieve some kind of economic scale in this large home market with billion population, and we hope they can deliver something in the emerging global market. Today, UCWeb, they had some presence in India, in Russia, in Indonesia, even in Brazil and Africa. But definitely it's still in the early time. They got some user base. They didn't create the monetization at this moment. But moving forward, we hope they can deliver something. Xiaomi this year they recruit Hugo Barra from Google. And this guy, I think he will play the role if the company really want to do something in the global market. So we think, basically in China, still there are a lot of, the great opportunity, but the key challenge that we lack of, the high quality talent people. We have so many opportunities, but we don't have too many high quality entrepreneurs. So that's the gap for us to really create high return. Gary mentioned that for the LP they don't want to see people generate return from the internal transaction from GP. So we want to seek those the winner will come from the great opportunity with great entrepreneur, and you have to be very innovation. You have the entry barrier. You can defend the competition from the big boy like Tencent, Alibaba, and Baidu.
I think that one of the things that has been very clear to us now after 8 years in Qiming is, in the U.S. when you invest in a company, the entrepreneur, the CEO, the founding CEO will spend a lot of time talking about how they're going to differentiate themselves from the competitors. We've decided here that when an entrepreneur tells that story, we don't believe a word of it, because it is impossible on the internet, not in healthcare or clean tech, but on the internet, to differentiate yourself is almost impossible. It's all about execution. And I think that that's one of the things the entrepreneurs need to really think hard about, which is, please don't tell us a story anymore on how you're unique. You're unique for as long as it takes for someone to come and visit your web page and then figure out how to code and copy what you're doing. You can be unique on execution. And I think that that's the real message now for us with entrepreneurs. And that requires more of a team. It requires a much longer time frame when you're thinking about when you're starting a company, how you're going to invest in the company. So you need to take a step back and realize that's going to be your value. Perhaps you will have, during the course of executing, you'll come up with a completely unique idea because of your scale or because of your market position that someone else really can't copy or modify too easily for their own purposes. But I think that really has to be the focus. And so the Superman or superstar entrepreneur here anymore that is capable with vision, et cetera, of just driving a momentum, kind of a momentum-driven business, I think that's done. So the focus really is going to be switching more and more, I think, to the execution side. The VCs, we're our own worst enemy. In China, 700 Groupon-like companies were funded by venture capitalists. So we put up for our limited partner, and we did DNPing, and then DNPing went in. We thought, we didn't do a Groupon. So you go to a board meeting, DNPing announces, oh, they're going to do Groupon. It's like, oh my God. So you just have this almost lemming-like, herd mentality. So I think it's also what we're spending a lot of time thinking about now is we're not paid to follow. We're paid to try to build a plan to think what, as Ron was saying, 3, 5, 8 years later, that's what we need to spend our time thinking about. And that's more important today than certainly any time since I've been in China.
That's interesting. Yeah. Ron, do you have anything to add?
Not really. I think that's well said. I think my views are just looking out on that topic. we like the financial services market. It's a market that's ripe for disruption through technology. We like the travel market. That's ripe for internet, mobile applications and usage. We're big fans of sort of the online offline market, where it's a combination of online user acquisition experience plus offline kind of a user experience to capture the consumer. So there's a lot of things, there's a lot of quite exciting things going forward.
Patrick, from where you sit today, how tough is it to get a deal done today compared to, say, 5 years ago? And what are some of the big deal breakers?
I think it's probably easier to get deals done nowadays in a lot of ways. I mean, it depends on the type of deal. I mean, they're getting more complex. I mean, we have a couple deals now where, there's dollars coming in offshore and then there's RMB coming in onshore, and everybody wants to make sure that they have maximum, flexibility to have offshore exits, onshore exits, offshore IPO. You could just kill yourself in terms of trying to think of all the permutations. And so, with more opportunities, and particularly in some sectors where there's still a lot of government funding that's supporting it, there's a strong desire to have a strong local presence in those deals, to be able to get access to some of that government funding, that it creates a lot of complexity in the deal structure. So in some structures, clean tech and life sciences in particular, very complicated, but deals get done. Definitely deals get done. And I think there is a mentality, much like there is in California, which is my background, of wanting to bring people together to get deals done. That there's a spirit amongst the investors and the entrepreneurs and the lawyers on both sides that we're there to facilitate creating a billion-dollar company, and we all want to do our part to help make that happen. So I think that spirit is alive and well. I think in terms of terms on deals, probably everybody has their own views. My sense is they're kind of fair for the market, for some of the realities of doing business in China, and wanting to make sure that you retain and incent key people. Because you think about all the sectors that everybody's referenced here, and this is true for us as well in professional services, is that we're only as good as our ability to attract and retain good people. Brad, who's here, he talked about how law firms are often very fragile because it's really just an affinity of people, and you start losing really talented people, and they collapse. And that's true really in a lot of industries. So your ability to attract and retain key people is just critical. And so you see that structured into deals here, probably even more importantly than other places, because it's hard to come by such incredible, that when you find that really talented entrepreneur, or in our case we find that really talented lawyer, you really want to motivate them to put their head down and to create a very valuable business. So deals are getting done. Any other comments on that?
Any deal breakers out there? What's the biggest deal breaker? What's the thing that makes a deal fall apart?
Valuation.
Okay. Gary, I see Gary grinning over there. He must agree. I don't know. Gary, that's it, valuation?
Okay. So our experience is this year, Nisa and William, who head the healthcare team, they're really good. We've lost 3 deals this year, and every single one's because of price. And in one case, we were 1/3 the price of the next 2 players. So you just can't chase that. You have to remember, I'm so much older than everyone here, and so I actually lived through '99 and 2000. In fact, I was one of the producers of that movie. I wasn't even just a participant, and doing the SoftBank venture stuff in Silicon Valley. So from that perspective, we have watched and they can go down faster than they go up. It's hard to believe, but they can go down faster than they go up. So I think that there's a little more of an approach of, if something's in our roadmap, especially if it's in healthcare and clean tech, if it's in the roadmap, then we'll be as aggressive as we can be. But at some point, the internal discussion simply is, you just can't continue to chase things. So we're seeing stuff run away from us, certainly in the internet and certainly in healthcare, not so much in clean tech. The problem in closing isn't evaluation. The problem is the complexity of the structuring around what folks have been talking about, where you have someone who wants to try to hold out hope of offshore and onshore listings or exits. And so the structuring complexity is just staggering. And so we have 3 deals in our clean tech pipeline. They're all approved. They've been approved for over 9 months. And we call every week, how's it going? And so it just keeps rolling forward. And there's always something, when things are open, there's always some stuff that changes. And so I think that's part of the problem, is just the complexity of those deals. By the way, that's the first time I've ever heard an attorney complain about complexity.
Yeah, we're supposed to love that, right?
Exactly.
Yeah.
Yeah, right.
But remember, we're in China and people want value, right? They really don't like to pay lawyers more than they have to. One comment I'd make on Gary's comment too is, he's looking at that from the venture capitalist perspective. He's saying, we're bidding on these term sheets and we're not getting the deals. Where, we're on the company side a lot, and so it's great when you're there and you've got multiple term sheets. But there's also plenty of times when you're not there with multiple term sheets and you're pushing for a valuation that's too high, or your last round was too high, and your momentum as a company, instead of continuing to kind of crank up, ends up plateauing, and it makes life much more difficult. So just a word of caution.
So, Gary, you mentioned that the VCs up here are all, this is like a Legion fan club, right? Is there anyone coming along that's going to be the next big angel investor, or is he it?
So the question
And
is,
why does everybody gravitate to him? Why are you all funding everything he does?
you mean as the super angel investor or just
Yeah.
the super entrepreneur?
Super angel investor.
Well,
he's both. I mean, he's really both, right?
Well, but actually interesting. We had I personally had some chance to work with like Lei Jun and Zhou Hongyi and also like Xu Xiaoping, Bob Xu. Several active, and also have some collaboration with some overlap with like the Cai Wenshen, those kind of active, very personal, active the angel investors. My personal observation is that over the past 2 years, angel investors become overheating in China right now. But today, a lot of people the whole trend is cool down. A lot of people realize it's not everybody is Lei Jun or or Cai Wenshen. Because actually the failure rate is extremely high.
Yeah.
But the people always choose to memorize, Cai Wenshen or Lei Jun. They choose to forget those failure cases. But when they really jump into that game, they realize how tough it is. And but we can see some interesting trend that some of personal angel investor, they choose not to be the super return direction. They will try to sell their equity, maybe in the first institutional round. They don't want to expect you can really get the full return. The company going IPO, they know the probability become extremely low. So I think like people like Lei Jun or Bob Xu. Bob Xu just institutionalized his personal activity from the angel fund to become kind of institutional gen fund, right? That's the backup by Sequoia. Cai Wenshen, he will keep us the personal angel investor, but it's very difficult to duplicate his case. He just live in Fujian, far away, but very local grassroots style. It's hard for you to duplicate his case. So my conclusion is that the only very few sophisticated, the individual investor can grow up as the super angel. It's not common in China, and the large number of the individual investors will become the failure case. So that's my personal observation.
Yeah, this is no different than the U.S., right? I mean, the number of people you can look to in the U.S., the super angels that have long, consistent track records of success is very, very short. And I think here, the reason, what's different about some of the folks, Jason Zhang, or if you look at Lei Jun in particular, he loves to execute. So the best possible super angel is someone that's not afraid of actually really advising the CEO on how to run the company. and they have opinions, and generally they're right. When they're wrong, they're wrong, but they're going to be right more often, or they stop doing that kind of business. And I think that most of the angels, they dabble. So you put money in seed, and then the Series A, you made 4 or 5 times your money, 2 times, whatever it is, you take your money back, you go dabble some more. Very few people put money in and then they're still on the board or chairman of companies 3, 4, 5 years later. That is just rare, and that's rare anywhere in the world.
Yeah, so I think that we cannot make money just by following angels. I think the history of VC in China is short relative to the US or elsewhere, and therefore it's always going to be whether the deal itself is good. Even when we talk about Lei Jun or Xu Xiaoping, actually a lot of this angel or entrepreneur turn, money guy, essentially comes from the internet world, right? So whether you look at clean tech or life science, or if you look at B2B business services, there are a lot of companies, great companies, have been formed in those sectors, not supported by angels. So I would say that when we look at our portfolio of the 50, 60 some deals that we've invested in China alone in the last 12 years, only 3 or 4 deals were really angel supported, and that the angel played a great role in helping the company be successful. Otherwise, I think what we would do actually is look at our fellow VCs. One of the big criteria for us is not who is the angel investor, but who are the investor, the board members, the partners around the table. I think as market goes up and down, and Gary, we're not that young, so we were in the market when we saw the down cycle as well. I think that when the market is tough, when companies are going through a tough time, whether the companies can be successful really depends on whether investors, the board members around the table are in sync, and that they're willing, to help that company or the CEO navigate those tough times. So for us, actually, one big criteria would be that we will look at the shareholding structure, and then who's the guy on the board, as well as whether the VC fund has a track record of supporting, companies over the long haul. So those will be more important factors for us.
Okay. Ron? Yes?
Yeah, I think just following up from that, I think it's the in China, like Gary said, a lot of the technology deals are really execution driven. So having been a technically trained, last 5 years been to me it's been a liberal arts education in terms of assessing people. Our U.S. partners are, I think, in some ways have an easier job. I think here I feel like half the time I'm a shrink, because we're doing a lot of people issues, and ultimately, our job as an early stage investor is to figure out who is the next Lei Jun, who is the young Zhou Hongyi, Ma Huateng. What are the characteristics of that person? Because when you do this every day, it's the business model stuff is not that difficult. There's the risk is most time is pretty apparent, but the people risk is something that's very difficult to assess at the early stage, and increasingly I believe it is absolutely a work of art, and it's something that it does take experience and quite thoughtful thinking about.
Okay. Are there any questions from the audience? Yeah, I see several hands up. We had 3, but I don't know what happened to the other. Yeah, here with his hand still up. Persistence wins.
Hi.
And could you please identify yourself?
Yeah, my name is Jord. I'm the founder of Artefesto. We haven't raised any money yet. I had a question for entrepreneurs in general in China, or perhaps the Asian region. How would entrepreneurs with a lot less networks here than in the West, for entrepreneurs and VCs to meet, sort of allocate where the smart money is for their venture? Maybe some of you have some experience with that. You could comment on that. Smart money being, I'm sure, as you know, not only the cash that you bring along, but the experience that could be very valuable for the company that is looking for cash.
Angels or VCs?
Of both.
VCs are looking at the smartest guys here.
They say.
So your question is about how you can attract attention from those VC, right?
Not so much attention. Let's say you were able to find them. Let's say there's a group of VCs on the panel today. Is it very well known per firm or per portfolio that you keep as a firm where the experience lies? Does that make sense? No?
So let me try and answer this question. I think that just as VCs do a lot of due diligence on you, you need to do due diligence on the VCs, right? So if you're looking for smart money, you have to understand, first of all, what sector you yourself you're in, your business is in, what kind of business model, what stage you are. And so the first level of information is obviously to get to know, the VCs, their firm, their sector focus. If you're internet and you go look for a clean tech fund, obviously you're not going to get the kind of attention you want. So basically doing your basic homework in terms of sector, stage, and then down to the partners. Essentially, if you are looking for partners who can help you grow through your different phase, so whether it's Series A, B, or C, then understanding what the partner has done in that particular sector that you are in, I think it's important. Then I think that, don't forget, I think the key reference or referral actually comes from another source, which is among the CEO entrepreneur network, right? So look at the VC, look at the partner, look at the deals that they are on, find that CEO and try to talk to that CEO, right? If you know the CEO, obviously it helps to attend more of Rebecca's event, because it's a great networking opportunities for all of you here. Getting that referral from the CEO, ask the CEO, this guy, he's an investor, he's your board member, how is this person? Is he the right person? So I think that if you're looking for smart money, and I think we all are, but it's still important to find the right type of shape and size of that smart money.
Right.
Okay.
And
good.
If
We have
one
another-
very
yeah.
quickly, because she mentioned that earlier.
Yeah.
If you take it one step earlier, so the angel round, let's say, or maybe a second angel round or something early on, what is your experience with that? Like, do you guys see most deals from angels bringing in cash plus experience or only cash? I mean, I think Elvin earlier mentioned that there was some guy trying to get out his cash.
Excuse me, we just need to move on. If somebody could just answer that really quickly, because we're
That would
running
be
out
nice,
of time,
yeah.
please. And we had several other questions.
Well, so actually, this question is it's weird for me, because actually my personal view is that venture is local business, and the startup is also kind of a local business. If you don't have kind of the local networking, so you do have to spend some time. If your business plan is very local related, you have to spend some time to get some the sense about the market, get a sense about this VC community and angel investors. So basically you have two things. One, you need to do some homework to very quickly research and quickly learn about this market. Second thing, you need to get some opportunity to access to know the people. It's not difficult if you're really very capable entrepreneur. The last thing is that whether you have really great idea and that you can manage your conversation and the first meeting with those experienced investor and create chemistry and inspire people. So basically, there's no secret. But basically, I just feel you have to be local yourself.
Okay. Yeah, I think there was a question a few rows behind.
Hi guys, impressive panel, and Trevor Lai from Thoughtful China and Up Studios. So actually Russell wrote a piece about 6 days ago about mobile gaming, and Gary, you mentioned a couple deals in that sector as well. So I want to ask you specifically, in Russell's report, he mentioned there's 80,000 developers pumping out 100 games a day. So how do you identify the mobile game companies that will actually be around and not be OMG pops, in a year?
Yeah, they're all trying to figure that one out.
I have absolutely no idea. I mean, I sit in the partner meetings and these guys talk about this game and it's going into beta and it's gone from 50,000 to 500,000 to 5 million users. And that seems like a good thing. But to be honest, so you're asking the wrong guy. So, right, because these folks would understand the nuances of what's happening on a Chinese game in the mobile market far better than me. But I try to listen carefully and be very polite when my partners pitch me on these great deals, and it basically depends on my mood and how much coffee I had that day.
Okay, yes, Robert?
My name is Robert Lee. I'm an entrepreneur from the Silicon Valley as well as here in China. I'd like to get back to the people risk issue that you folks have all mentioned, as well as actually everyone that preceded you. Everyone had mentioned about the issue about the lack of talent. And of course, no one believes that they don't have talent, right? And that doesn't involve anyone here in this room. But nonetheless, we all know that's a problem, and you all have to deal with it. So I would like to hear your experience in terms of how do you manage that when you make your investments into companies that I would say probably have a mix of talent levels that you're looking for.
Okay. Who wants to tackle that one? Hope?
That's a very good question, Robert. Obviously, it's easier to build a team in Silicon Valley because we have all kinds of support structure there and network to help us to recruit and find the right people. And once we have the professional management to come in to work with the founders, either side by side or take over at a certain stage of the company, it's accepted culture. And here, we have done both. We have grown the company to a certain stage and hire from outside, maybe a COO from Suntech to come and run an energy company. We have had experience, both successes and failures. There have been situations where the original founders was so antagonistic and upset and does not want to stay on as chairman and support the growth of the company. And then subsequently, there's some power struggles and impacting the company. There has been another situation where we have found Silicon Valley executives from Microsoft to come in and work with the company, and they worked very, very well and grew the company to quite a big size. So managing people is harder here. As Ron said, we spend a lot of time to help to build that team. But on the other hand, for me, I think it's harder to continue to work through the China factor, so to speak. People are very creative, very talented, sometimes too talented. And with the fact the IPO window has been closed for so long, we used to, as part of the VC community, we pitch to them, motivate them to play by the rules because this is what we have to do to go IPO. Now, governance issue, all of those issues are a little bit more difficult to convey without those external motivation factors, so to speak. So I think, however, I think, the fact that the M&A activity is still very strong and the fact that there's less money available perhaps continue down the road, I think I'm optimistic that we can continue to work together as a community to work through the governance issues and challenges along those lines.
Okay.
Just add one more point. I just mentioned that China lack of talent, but maybe let me correct that. So basically, from the VC's perspective, I think China have a lot of the intelligent people. We have a lot academic level. The problem is that we lack of the leader. As the leader, the leadership, basically in China, we don't have too many high quality leaders as entrepreneurs. Is first. The second thing, China, a lot of people, they just don't understand. They don't have the sense about a lot of the governance and the game rule. They don't have that sense basically. So you have to train them. Maybe they are the good personality, but they are not familiar with those game rules. Sometimes they don't realize they break the rule. So the second challenge is how to help those people learn those game rules very quickly. And the last thing I want to compare the U.S. and China is that U.S. I have chance to travel in the U.S. as a business trip and meet different people and meet different company. It's very easy for you to sense that you can seek the consistency in terms of they have this very similar style, because the business culture or business system is very unified. But China is kind of in a hybrid, a very mixed economic system. If you have a chance to deal with local entrepreneur, you can have very variance. You can seek that variance. Maybe like the manufacturing business, the high-tech business, or some private family business in Sichuan or in Zhejiang or in Fujian. And also sometimes you deal people, they have the government background. We call them the red capitalist. So basically you have to deal with very different, the style and the culture people. So we have the screen engine to screen a group of people with the similar style and the culture, and we can share the same vision. So that's why that's the cultural gap between China and the US. So you have to be very careful to choose the right type of entrepreneur you want to cooperate with them. Yeah.
Anyone have anything to add? Oh my goodness, there's so many more questions. We're just almost out of time though. I don't think I've taken any from this side, so we'll just take one from this side in the second row.
Hi everyone, my name is Brian Wong, formerly of Alibaba and now doing some angel investing on my own. And I'm just curious, amongst your portfolio companies, which of any of your companies are you seeing that have global aspirations in terms of building a business that has that component to it? And second, amongst the companies, any of them that you see doing real, truly indigenous innovation, something that you haven't seen in anywhere else, like America or the developing countries. Wanted to get your thoughts on that.
Okay.
So talking about a couple sectors specifically, so we have 28 companies in the healthcare sector. 20 of the 28 have talked to us about something outside of China. TigerMed, which is publicly listed in Shenzhen, is setting up clinical research operations in Southeast Asia, setting up stuff in India and also in the United States. So I think in the healthcare sector, we tend to see a little bit more of that. Clean tech, we've invested mostly in service companies, but 3 of the clean tech investments we have also have developed technology here to send overseas. I wouldn't say the technology is absolutely unique. In terms of really unique technology, there's a company, Neurotron, that built a cochlear implant that actually is serviceable in children as young as 3 years old. That was unique in the world. That was a Chinese team, but the Chinese team was located in San Diego. But then they moved to China. So there's a lot of those hybrid structures you see where the innovations may be occurring in different places. But again, that theme of commercialization, coming into China. On the internet side, a lot of the companies talk about it, but the good news about the Chinese market for internet companies, for the Chinese entrepreneurs, is that it's a little bit of a walled garden. They can do things here they can't necessarily do in the rest of the world. There's a scale of market that's very interesting, but there's also a behavior and an attitude that works against them when they go overseas. So I actually advise US entrepreneurs, hate to say it this way since I'm in Shanghai, but I tell them to ignore China and to build a fence around China and immediately set up operations with the best possible partnership in Southeast Asia, India, et cetera, which then acts as a buffer against the Chinese companies coming into those markets. So if I was advising a US entrepreneur, I would not necessarily spend a lot of time trying to break into China, knowing what Alvin brought up earlier, which I think was some really good points, but think about where can you build a barrier somewhere else against those companies in China when they decide to go overseas. At some point, the Chinese market by itself won't be enough, given the number of companies that are being created. But thus far, it's been able to sustain most of these companies by itself.
But maybe I'll add. I think we are U.S.-China cross-border fund, so we do see a lot of companies coming to us. So gaming, we feel that gaming is universal, and so a lot of Chinese companies, whether it's mobile gaming, that browser games, things like that, it's universal. So those companies are coming up to us to say, hey, in addition to publishing in China, can we bring the model outside? So that's recurring trend. I think the second trend that we are seeing is this also related in terms of innovative business model, I think Morningside and ourselves, we invested in a company called YY. They are unique. I think their business model, we have US companies knocking down on our door and saying, can we meet with YY? Can we learn how they monetize, how they use the concept of gamification, virtualized items? How do you bring that not just to the gaming sector in the US, but to, say, the music sector in the US, to different internet products in the US? So I think in terms of exporting made in China, cool business model. I think it's really on the business model itself, monetization. Chinese entrepreneurs are very good at monetization when they put their heart to it. It may not be advertising revenue, but it's about how do you get the extra cent from the user who's using your product. So that's the piece that we are seeing, that we are increasingly bringing our Chinese companies to the US to share with our US portfolio companies some of this new thinking in terms of monetization.
Okay. Well, I think we're going to end on this note of optimism and hope. And thank you so much for staying with us. And let's give our VC panelists and Dealmaker panelists a round of applause for some really enlightening remarks. And there's going to be a cocktail reception afterwards. And also China Net Cloud is having an after